But let's put the spotlight on Sterlite Technologies because the company has announced its quarterly earnings where you've seen a dip in the revenue on a year-on-year basis. 4.6% is a dip on a year-on-year basis for revenue, but the margins have bettered on a year-on-year basis. The losses have also reduced when you talk about the company. So we have Ankit Agarwal, who is the managing director at Sterlite Tech, joining us on the show. Hi Ankit, a very good morning to you. Thank you so much for joining us in ET Now. And let's talk about your financials and exactly what led to that revenue decline, as well as if you could help us understand what exactly contributed to the reduction in your losses as well.
Yeah, absolutely. Thank you for having me on the show. So I think two or three things. One is definitely from a driving perspective, the optical business is our key driver. As we've been sharing over the last few quarters, we have seen some slowdown in North America in terms of new demand, particularly in terms of inventory, which had built up. So as we see that inventory starting to get reduced quarter on quarter, we are quite confident that the volumes will start coming back up. We've already started seeing a pipeline of opportunities, pipeline of bids increase in that market, and similarly in Europe as well. So we're quite confident that our volumes will come back up. Broadly, we've been operating at between 45-50% utilization. And we're very confident that once we go back to about 70% utilization, our EBITDA margins will go up from about 12%, 13% to almost 20%. So this is that period that we're in the transition period. And as our volumes increase, both on our cables as well as connectivity, you will see that improvement in profitability. And the second part is on the services business as well. We are seeing very, very strong pipeline of opportunities, both on system integration as well as fiber deployment. We have already secured about 2,600 crore project in Jammu Kashmir for BharatNet Phase 3. And as that APO gets released to us in the next few weeks, we'll see how to execute that in the coming next 3 years.
Right, Ankit. So you did speak about the profitability and you are expecting it to happen. Any roadmap or any timeline that you're expecting to hit that profitability mark?
No, as I said, it's just a function of now making sure we work very closely with our customers in terms of product development. We now have more than 700 patents. And also at the same time, we worked very strongly in terms of our cost reduction initiatives, which you'll see in the numbers in terms of fixed costs. So I think across the board, we are well set up now. And as the demand continues to improve, which we are seeing in the market, we do expect that quarter on quarter, the profitability should improve and then stabilize at that level.
And that's the take coming in as far as improvement in profitability and the momentum there is concerned. Ankit, this is Shreyansi as well joining the conversation. I also wanted to quickly ask you about your growth levers then. Where do you see growth coming in from? What are the catalysts that you're marking out when it comes to growth then?
Yeah, absolutely. So if you look at the global optical fiber cable market, this is expected to broadly grow between 8 to 10% CAGR over the next 5 to 7 years. In addition to that, just North America itself is expected to grow north of 15% every year for the next 5 to 6 years. All of this is really on the back of 3 to 4 major trends that we're seeing. Clearly, 5G requires massive amount of fiberization. Connectivity to the tower has to be north of 80%. So that's something that will clearly play out over the next 3 to 4 years. The next big driver is in terms of demand is both fiber to the home and as well as rural connectivity. So these are very, very important trends where we're seeing massive projects like BEAD projects in the US is $42 billion. BharatNet out here is north of 1 lakh crores. So similarly like that, every major country, Germany, for example, is looking at huge connectivity in rural Germany. So that's the second trend. The third big trend we're seeing is data center and the whole massive influx of AI that we're seeing. This is leading to a complete redesign of data centers, which are requiring a lot more fiber optics within them and connecting the data centers, AI-led data centers within a campus. So this is also the third big trend, which will lead to a huge amount of requirement of fiber optics. And of course, overall, we are seeing that in other applications like oil and gas, defense, etc., we're seeing also an increased demand. So all of this should come in over the next 4 to 5 years. And then, of course, 6G is something that will get factored going forward, probably 29, 2030 onwards. From our perspective, we are clearly seeing this segment, DC plus enterprise, also as a growth segment. And we've just shared that north of 20% of our revenues in the current quarter came from the DC and enterprise segment as well.
Exactly. I was going to ask you about those segmental breakups, and nevertheless, you did answer that, Ankit. But since there's paucity of time, I'll just club two questions to you. One, I wanted to understand your capex plans going ahead. and also you have an order book of about 9,050 crore rupees. If you could tell us from where these orders are flowing in, which segments, and which one do you think will better on or in fact contribute more to your revenue as we go by the year?
Yeah, so currently our open order book is north of 1,000 crores, 9,000 crores, and this doesn't include our BharatNet project, which we have won, which is about 2,600 crores. So I think a fairly healthy order book pipeline that you see. This is clearly going to be a mix of, telecom segment, defense segment, as well as this enterprise and data center segment that I spoke about. Very focus for us now will be very clearly in terms of the utilization of our assets that I spoke about. And then clearly from an investment perspective that you asked in terms of capex, a large part of our capex and addition has been done over the last 2 to 3 years. We're very well set with almost 50 million fiber kilometers of glass and fiber capability, and almost 45 million of cable facility, including our latest facility in the US. So I think our capex spends will come down significantly from historical 400-500 crores to maybe 100-150 crores, and very marginally where we need to invest, for example, in our cable accessories and interconnect solutions. Maybe there we'll do some small investments, but by and large, the focus is now to utilize our facilities, generate cash, and reduce the debt on our balance sheet.
All right, then focus is on cash generation as well as reducing the debt on the balance sheet as well. Thank you so much, Ankit, for taking time out and joining us today. Paucity of time, but thank you so much for getting us that take coming in on the earnings fine print as well as the growth roadmap.
If you like this video, then like, share and subscribe to ET Now.